Hi everyone, welcome to the Okta FX Q&A. My name is Ambrose Ebukar, and before I go ahead to talk about this Q&A session, you can type your name and where you're watching me from in the comments. So go ahead and type your name and where you're watching me from in the comments. Now, this is a special session where you can ask me questions and get your trading cases analyzed. We've received your questions and we'll go ahead and deal with the most frequent ones. So while I answer the questions, if you don't see your question or if I don't answer your question, that's fine. You can go ahead and type your questions in the comments as well. There will be a section where I look at the comments and answer the questions that are in the comments. So go ahead and let me know where you're watching me from. Uh, Go ahead and tell me your name as well. Okay, we have Sibeko from South Africa. We have Blessing Friday from Port Harcourt. We have Olanrewaju from Kwara, Nigeria. We have Raja from Pakistan. We have Victor. We have Valentine from Port Harcourt. Okay, Victor from Asaba. Um, Welcome, guys. Also, there would be a promo code that I would reveal at the end of this session, and this promo code would give you 100% bonus on your deposit, and would also give you room for more profitable trading. So stick around to the end of this live session or this Q&A to find out the promo code. All right, so I'll go ahead and answer the questions right now, and massive welcome to every one of you. Okay, so let's look at the first question. Um, how do I start? Right now, with trading, the best way to start is to get educated. And I like to say that the importance of forex knowledge cannot be overemphasized. It's important that as a trader, well, beginner trader, just coming into the market to understand how it works, it's important that you um, go through the educational process, and try to understand. Well, start from the basics. I think I'm going to just type the steps for you guys. Okay, so you want to start with the basics, like I said. Start with the basics, and you also want to work on a strategy, work on on a trading strategy. There are multiple strategies in the forex market, so while choosing your strategy, it's important that you backtest the strategy. Basically practice to understand. I'm going to add that as well. And also you want to understand trader psychology and risk management as well. It's better, right? Okay, let me just push this upwards. Yeah, so way to start, right? Uh, Look at the educational process of trading and not just creating that awareness that, okay, I need to learn. Actually start or take the first step. You can start with the basic. Um, it's just like maths, right? So for you to be able to solve like algebraic equations and probabilities, you need to know how to add and subtract. So you want to start with the basics, and you want to work on the strategy. So you want to work on the strategy and practice to understand how that strategy works. See how you can refine the strategies to take your entries from the best confident and comfortable zones. And you also need to understand trader psychology, how successful traders think. This can also help with when to trade, when not to trade. This can also help you understand um, trader psychology can also help you understand when to stay out of the market. This goes in line with your trading plan as well. So I'm going to add that as well. I'll create a trading plan. Create a trading plan. All right, I understand risk management. Because these are the things that you can control in trading. You can control your risk. You can you can control how the market moves or where the market is going to go, but you can control your risk per trade. So to answer the question on how to start, um, start with the basics, work on the strategy, practice to understand how the strategy works, understand trader psychology, how successful traders think. This can also help you with discipline as well, and patience, which are the things that are very essential for traders generally, regardless of your level of trading experience. And also risk management is key as well, and creating a trading plan. You also need to take your time, step by step. Consistency does more in improving your trading abilities. Okay. All right, so now you have an idea on how to start. It's important that you take the first step. So I wish you success on your trading journey. Let's look at the next question. Okay, like I said, guys, if you don't see your questions, you can also go ahead and ask these questions in the comments. There'll be a section where I look at the comments and answer your questions. All right, can I withdraw anytime I want? And how can I set my app to prevent me from losing my funds? Okay, so with OctaFX, you can make, withdrawal requests anytime, and there are multiple withdrawal options that you can choose from. I'm just going to show you guys the options. So we have uh, digital currencies, we have Nigerian local banks, we have Neteller, Krill, multiple options that you can choose from. And withdrawal usually takes 1 to 3 hours with OctaFX. And let's look at the second question first before I talk about that. Okay, how can I set my app to prevent me from losing my funds? Now, about this second question, here's the thing. Losses are an integral part of trading, right? I said something earlier. I said you don't control the movements of the market as a retail trader. You can be, 100% certain of every outcome, but the good news is you can control your risk on every trade, right? And there are steps that you can take or that you can implement on your trades to mitigate the effects of unsuccessful trades on your trading account. I'm just going to go over those steps right now. Okay, so these are steps that you can implement on your trading to kind of, reduce risk and mitigate the effects of unsuccessful trades on your trading account. So the first thing that you would want to do is to identify your risk appetite. This can be per trade, and this can also help with choosing a startup amount, like a trading capital. So the first thing you want to do is to identify your risk appetite before you place a trade. The second thing you want to do is to use a conservative lot size. The lot size is also called position size. So if you're familiar with any of this, it's the same thing. So use a conservative lot size. The lot size is basically the units of a currency you want to buy or sell. How many units of a currency that you want to buy or sell. And since we have the advantage of using leverage, you see traders go ahead and misuse that leverage and just put high lot sizes on their trading accounts, and that is not healthy for your trading account. So use a conservative lot size that can align with your risk appetite, right? So if your risk appetite, say, or if you look at the market and you look at market conditions, and you know you want to risk 2%, 1% on a trade, then you'd have to use a conservative lot size that ensures your risk is not above 2%, right? So that way you can mitigate the effect of an unsuccessful trade. Should the trade go against you, then you've reduced the risk on that trade. And the last thing you want to do, which is also important, is to use a stop loss order. Right, so you also want to use a stop loss order. Now, stop loss orders are instructions given to your broker to close your trades at your preferred price should the market go against you. Right, so these are steps that you can take to control your risk and reduce your risk on your trades. So I hope I answered the question on how to prevent you from losing your funds. And there's also a question that we got frequently about the instant bank transfer, and a lot of people did not understand how the instant bank transfer works. So I'm going to go over it in a few steps to help you understand how it works, right? So with the instant bank transfer, here's how it works. When you want to make a deposit with OctaFX, you have multiple options. You have your digital currencies, you have local bank transfer, you have Neteller and Skrill, and you'd also see an option to make a deposit with instant bank transfer. Right now, this illustration is for PC, and this is for the OctaFX trading app. Right. So if you click on the instant bank transfer, which is here, you'd want to put your or specify your deposit amount. Choose how much you want to deposit. You can select your preferred amount or type in your preferred amount here where you have other, and you also see like a place where you have to choose the bonus. Now, if you stay to the end of this Q&A session, I'll reveal a bonus for 100%. I'll reveal a promo code rather for 100% bonus to your deposits. This would give you more room for more profitable trading. But yeah, when you impute your preferred amount, and the next thing you'd see is where you have to put your deposits, if any, and you'll also be directed to choose your bank name, right? So if you're using the OctaFX trading app, then you can click on bank name. You'd see a list of banks. You can choose the one that you're using, and the next thing that you would see is your deposit confirmation. So this is where you confirm the amount, the payment method, your bank name, and the trading account that this deposit would be made into, right? So once you click on confirm, you will be directed to a new page, which is the final page, the payments page, where you'd see the trading account number, the OctaFX, the trading account number for that deposit, rather. So what you want to do is go to your bank app and do a transfer to the account number that is reviewed, and then your deposit would be executed and would be reflected in your trading account within minutes. It's also important that you don't save or reuse the account number. It's a one-time account number, so if you want to make another deposit, then you'd have to restart the process. Okay, so this is exactly how the instant bank transfer works in a few steps. Let's look at the comments. Okay, someone is saying my voice is very low. Just to be sure, can you guys hear me clearly now? If you can hear me clearly, please go ahead and let me know in the comments if you can hear me now. Okay, all right. So let's look at the next question. As a beginner in Forex trading, what are the fundamental steps one should take to avoid pitfalls in the field? Well, as a beginner trader, I think that you have, better chance of scaling up to advanced levels, or, getting to becoming a profitable trader if you, first have an adequate knowledge of how the market works. and understanding the risk involved in trading. That's the first thing you want to do. Let me see if I can also type that as well for you guys. All right, so the first thing you want to do is to have an adequate forex market. The second thing you want to do is to understand the impact of leverage, right? It's also important. Now, if you don't know what leverage is, impact, that's the wrong spelling for impact. So leverage is like an advantage given to you by your broker to buy and sell more units of a currency that you would not be able to buy and sell without leverage, right? So with leverage, you can actually buy and sell more units of a currency in the forex market, right? Now, leverage is a two-edged sword. It can give you more room to make profit, give you more chances and opportunities to make profit, but it also exposes your trading account to a level of risk, right? So as you're taking advantage of leverage, you should also implement risk management steps, like I said earlier, using a conservative lot size, using stop loss orders on your trades and all that, just to, you know, take advantage of leverage, but at the same time, minimize your risk in trading. Now, another thing you want to do is to use a moderate position size. So position size is just the same thing as lot size. You also want to choose a risk to reward ratio. So with trading, risk to reward is basically how much you want to risk on a trade and how much you want to get in profit from that trade. You can just look at market conditions to identify areas where you can set your stop loss, areas where you can set your take profit, right? So these are the things that can help you to, well, avoid mistakes in the market. Another thing would be to control your emotions. And emotion trading revolves around a lot of things. It can be revenge trading, it can be continuous trading after, consecutive profitable trades. So it can be a lot of things. And you also want to have a positive approach to the market. So you also want to have a positive approach to the market. So these steps, when implemented, can help you um, avoid mistakes and just keep you in the market long enough to place more trades and become profitable over time. I think I have to clear this first. So those steps would help you, you know, avoid mistakes and also avoid, like you said, pitfalls in forex trading. So let's look at the next question. Why does M5 chart and H4 chart give different results? The prices are the same, but the indicators and charts are different and confusing. Now, if you don't know what M5 and H4 is, these are M5 is 5 minutes chart, H4 is 4 hour charts, right? We have different time frames of charts in the market. I'm going to show you guys these different time frames right now. All right, so if you look at my chart right now, or if you look at my screen, you're going to see that this is a candlestick chart, and the candlestick chart is a graphical representation of bullish and bearish momentum. Basically, just tells you, gives you detail on what exactly is going on in the market at a specific time. Okay, so each candlestick chart is attached to a particular time frame, and it basically interprets market momentum at that time frame, right? So we're going to start with the one that is just that we can see right now, and this is H4. So if you look up here, you're going to see different time frames. We have M1, M5, M15, and M30. This stands for minutes, so 1 minute, 5 minutes, 15 minutes, and 30 minutes. And then we have 1 hour, 4 hours, 1 day, 1 week, and 1 month, right? So what this means is that just like you have the charts representing H4, this means that every single candlestick you see on this chart, I'm just going to zoom in a bit. Every single candlestick you see on this chart opened and closed within 4 hours. So every single candlestick you see on the H4 time frame opened and closed within 4 hours. So this basically tells me, let's say for example, let me just zoom in again. So this basically tells me that within 4 hours, this candlestick that you see here closed bullish, right? It closed above the opening price, which means within 4 hours during this time, the buyers were in charge, right? The buyers were in charge, and that's why we have this bullish engulfing candlestick. Now, just like the person asked, why is it that the time frame will be in 15 minutes and the time frame in 4 hours are different? Let's switch to the 15 minutes time frame. Just zoom out a bit. So on the 4-hour time frame, this is what it looks like. Now this is the same instrument. We're looking at Euro USD, right? Euro USD is right here. So this is what the 4-hour chart on Euro USD looks like. Now if I go to the 15-minute chart, this is what it looks like. So you can obviously see that it is not the same. Now what this means is that we are currently on the 15 minutes. So what this tells us is that every single candlestick you see here opened and closed within 15 minutes, right? Every single candlestick you see here opened and closed within 15 minutes. So if I zoom in, let's say this one, for example, right? So what this tells me is that within 15 minutes, or this candlestick opened and closed within 15 minutes, and it's closed bullish because it closed above the opening price. And as you can see, it's a bullish candlestick, right? It shows bullish momentum. It shows that at this time, within 15 minutes, the buyers were in charge. That is why the price was pushed upwards. Okay, the same thing for lower time frames like the 1 minute. If I zoom out a bit. So if you have the 4-hour looking like this, the 15 minutes looks different. The 1 minute would obviously look different. And when you're looking to analyze the overall direction of the market, looking to understand the overall trend, it's important that you look to the higher time frames, the daily time frame, the weekly time frame. If you're a day trader, you can look at the 4-hour time frame. And this is because the lower time frames can be noisy, right? Just like you have this 15 minutes time frame, for example. It takes like 4 15 minutes candlestick to make up one candlestick on the 1-hour time frame, right? And it's also going to take 16 15 minutes candlestick to make one candlestick on the 4-hour time frame. So when you're looking to understand the overall direction of the market, you can look at the higher time frames, and that can give you, take away the noise and give you a clear view of the overall direction. All right. So let's look at the next question. Um, how much does it cost to be a member? Well, becoming an Octa trader is free. You just have to download the Octa FX trading app on App Store or Play Store. Or better still, you can download the Octa FX trading app with the link in the description and create a trading account. And it's free. Let's look at the next one. What is the least amount I can use to trade in OctaFX to earn profits? Okay, so with OctaFX, the minimum deposit is $40. But if you choose to go higher for more profitable trading, you can. And while choosing your trading capital or startup capital, you want to start up with a capital that can help you utilize risk to reward. So if you're risking 1% on a trade or 2% on a trade, you want to start up with a capital that can help you utilize that. Okay, if you're using like for example a $40 account and you want to risk 1%, that would be 40 cents, right? So if that's ideal for you, that's fine. If you want to go higher for more profitable trading, you also can as well. And there are multiple options, deposit options that you can use to make deposits with OctaFX. Okay, I am a student and I am new to Forex trading. I want to make money from it, but I don't know how to go about it. Well, this is something that I can really relate to because I got involved with trading when I was still a student, and one of the things that I would say delayed my skill up to advanced levels, if I can put it that way, or delayed profitability at the time was not having a trading plan. Okay, education is key with trading, but it's also important that you have a trading plan. So as a student, if you want to become an independent trader, you can create a trading plan or a schedule that that allows you to utilize at least 2 to 3 hours a day to study and practice trading. And if you won't be able to create a schedule, that's also fine. You can use the OctaFX copy trading app, and in the OctaFX copy trading app, you have master traders and their performances as well. So you can choose from your preferred master trader that you can copy the trades. You can also check their performance, look at their risk score and read their profit terms. And if you see a master trader that you prefer that aligns with your trading style, you can go ahead and copy their trades. So I think this can help you go about trading as a student. Okay, what does it take to be a skilled trader? What does it take to be a skilled trader? Well, becoming a skilled forex trader includes, the knowledge, understanding price action, understanding risk, understanding trader psychology. With price action, you also need to understand psychology levels, or the use of indicators, understanding trends, and all that. All these are inclusive, but I would say there are three key traits or characteristics of a skilled trader. See if I can write that down as well. So the first one would be discipline. Second one would be patience. And the third one would be consistency. Right? So these are three key traits of or characteristics of a successful trader. Now, discipline would help you stick to your rules or your trading plan. Discipline would help you with trader psychology as well. Patience would help you, anticipate market moves, be patient enough for the market price to get into your comfortable zones. I mean, you're looking to take trades from, high probability setups. You don't want to just come into the market and start clicking on buys and sells just like that. You want to analyze and, let the market get into comfortable zones, and you can execute your trades. And you don't want to just go ahead and start making rash decisions. And consistency would help with studying. Consistency would also help in improving strategies. So if you're consistent with a strategy, you can identify or you can measure the um, profit rate of that strategy in a longer term, right? So for example, if I learn a new strategy today and I try the strategy tomorrow and it doesn't work out, with consistency I can look at that strategy and understand why the strategy did not work out, how I can refine the strategy to work better for me over time. And then consistency would also help with unexpected results, right? So in cases where you place trades and the market goes against you, you just go back to your drawing board and ask yourself questions like, what did I do wrong? How can I improve? How can I improve on my trading abilities to make the best profitable trading decisions in the future? Okay, consistency can also help when you're less motivated to trade. You know, uh, keeps you going. All right, like I said, consistency does more with improving your trading abilities. So these are three key things that can help you to become a skilled trader. So you can add this to the knowledge and everything I said earlier. All right, let's get the next one. I am glad to be part of this monumental trading platform. I'm a total novice in this, but very keen in learning the pros and cons of trading. I have already registered, created both real and demo accounts, and funded the real account. But I read and did my best to understand how to place orders as well as to set stop loss, but I could not comprehend. I need practical knowledge with some of your experts. Okay, so it's amazing to see how passionate you are about trading. This reminds me of my early days, where I want to learn how this works. I want to know how the market works and all that. And I understand that, identifying a strategy that works perfectly for you or that works, perfectly well for you can take some time, which is why you might be finding it difficult, just like you said, you could not comprehend. I'm going to assume that you've watched the webinars, the OctaFX webinars, because you said you've done your best to understand how to set a stop loss and all that. So here's what I think you can do. You can go ahead and watch the live trading sessions from the OctaFX live trading sessions from trading experts in the YouTube channel, the OctaFX official YouTube channel. And now you know the basics. You know how to set stop loss and this basic stuff. You can improve on them with the webinars, and the live trading sessions will just give you a better understanding of first market approach, right? Help you analyze, help you understand the things that you need to know to make the best profitable trading decisions. You will see the traders analyze the markets live, place live trades. This can help you with knowing what to do, knowing how to identify a market structure and place um trades. Okay, so I think that you can take advantage of the OctaFX live trading sessions and watch them and understand exactly um, how the market works and how these expert traders approach the market. Let's look at the next one. How will I be copying trade and how much will $200 trading capital give me in return? Okay, so if you want to copy a trade, OxFX has a copy trading app that you can take advantage of. You can look at the performance of master traders for preference, check the risk score. Just basically look at the performances of these master traders and identify which one you prefer, which one aligns with your trading style. And about your startup amount and how much you can get in returns, well, market conditions can be dynamic and so will the results be, right? But your returns can be influenced by your trading style, you know duration as well. How long are you looking to trade for? What's your trading style? These are things that can influence your returns. Now, just for, well, just to improve in your trading decisions, you can go ahead and choose your or identify your returns in terms of percentage, not money, right? This can also help you reduce emotions in trading. So if you're looking at the market, you can identify, okay, these are zones that the market can get to. This is the percent I'm looking to get out of this trade, instead of looking at the money itself. So I think that this can help with reducing your emotions with trading. But about copying a trade, you can use the OctaFX copy trading app to copy trades. Like I said, guys, if you don't see your questions, you can go ahead and ask your questions in the comments. I will be looking at the comments to answer your questions soon. Okay. Actually, on Monday, I blew my account. How can someone deal with emotion while trading? Well, this is a very good question. You know, dealing with emotions is something that majority of traders face in different trading levels. Now, in your case, you said you blew your account. Now, a blown account happens when 100% of your trading account has been exposed to risk, which shouldn't be, right? So with trading, risk management is key, and this is going to help you reduce, your reaction to an unsuccessful trade. So it's important that you implement risk management steps. Use conservative lot size, use stop loss orders on your trades, analyze your trades before execution, and that can help you just minimize risk on your trades. Now, in the case of a managed unsuccessful trade, so let's say you use proper risk management on your trades, and for some reasons the trade went against you, what you can do is to take some time off the charts, and look to understand why you lost the trade, what could have been done better, how you can improve on making um, profitable or the best profitable trading decisions in the future, so you can stay off the charts and come back when you're a bit calm. Remember that you need a practical mindset and a clear sight to approach the foreign exchange market. So I hope you can apply this to your trading. If you don't want to ask this question, I hope you apply this to your trading, and confident that you would see improvements. Let's look at the next one. How much did you start with, and how did you get your money? Okay, so at the time, well, I was a student at the time, and I think I started with $100 that I played with. I just starting with $100. Basically, what you did was to basically give me an idea of what trading a real account was like, what trading a live account was like, what making real profit was like, what losing money was like. That's just what um, it introduced me to. And at the time, I was fully into digital tech. I had some skills. I was like a web designer and developer. I was also into graphic designs, and I was a video artist as well. So when jobs came from these skills, I would just take a bit and fund my trading account, and that's what helped me actually uh, get funds to start trading. Okay, so I'm just going to look at the comments to see if there are questions that you guys have asked in the comments. But yeah, guys, it's the Q&A session right now, and I'm going to look at the comments. So if you didn't see your questions, you can go ahead and ask them in the comment section right now. I'm just checking the comments to see if you guys have questions that were not answered. Dabs says, how can we get authentic trade signal? Well, if you download the OctaFX app, you'd get notifications from time to time on areas on your charts where buying pressure can be kicking in, selling pressure can be kicking in as well. You'd see details. Excuse me. You see details on areas where you should look to execute trades and things you should look out for from time to time. So you can get the OctaFX app. You can also do that with the link in description. Download the app and get this notifications or trade ideas. Nuru says, good evening. If market retest the resistance with bullish engulfing twice, is that strong confirmation to buy? Well, you know that resistance is an area on your charts where selling pressure um, could kick in, you know. So if you see a bullish engulfing form at resistance, I think what you can do is to wait for a candlestick that either closes above the resistance or below the resistance. That can help you identify the next direction of the market. You can wait for the next two candles actually. So you wait for the first one to close either above the resistance level. Well, if you're looking for confirmations to buy, then the next candlestick should close above the resistance level, and you're looking at if the bullish momentum is continued, and you can look to execute trades at that point. Okay, so you don't just go ahead and buy whenever you see a bullish engulfing candlestick. You can be patient to see what the next candle says. The bullish engulfing candlestick can be a confirmation that buyers are stepping in, and it mostly occurs in a downtrend actually, but it can occur anywhere, right? So you can just be patient enough to see what the next candlestick after the bullish engulfing candlestick says. How to impute stop loss and take profits in a trade? Blessing Friday is asking. All right, so let's say for example, give me 1 second, guys. Okay, so let's say for example, we're looking at the Euro USD chart, and let's say I want to, open a new trade on Euro USD right now, right? So I just come over here and click on that icon, and this box pops up. So this contains the currency that I'm trading, which is obviously Euro USD, the type of order, market execution. We also have some pending orders as well. The volume is for lot size, and you also have your you also have the chance to put in your stop loss and take profit levels. You also have this box where you can put in your stop loss and take profit levels. So if I want to place a trade on Euro USD right now, done my analysis and it's time to execute the trade, I can put my stop loss here, I can put my take profit here, and I can click sell or buy, depending on what my analysis says. So that's one way you can put stop loss orders or take profit orders on your trades. So I hope I answered the question correctly. Please, what are the digits beside the charts called? So you can call these prices or you can call it exchange rates, right? So these are like prices or exchange rates. Chike says, what are your top 3 to 5 books you would recommend for study? Well, obviously, I would say you should read Japanese Candlestick Charting Techniques by Steve Nyssen. Um, that's a book that helped me understand, uh, how candlestick works, helped me understand momentum, how to read candlesticks at the time. Um, can also read the 10 Essentials for Forex Trading. I think this was by Martinez. Can't remember. But the 10 Essentials of Forex Trading by Martinez. I think Jared Martinez or something. So you can read that as well. You can read, there's this book by Kathy Lian. It's Day Trading and Swing Trading. It talks about, different trading styles, day trader, swing trader. So that can also help you understand. So I'm just going to see if I can take one more question from the comments. Okay, so this one is by Abu. If you do your analysis on the 4-hour time frame, what time frame do you get your entries in order to get a good stop loss? Well, first off, it depends on the kind of trader you are. If you're a day trader or a swing trader, so if you're a day trader, you should look to execute trades on the lower time frames, right? 15 minutes, you can execute on 5 minutes, you can also execute on 1 hour, right? If you're a swing trader, you can execute trades on 4-hour time frame. You can also execute on 1 hour time frame. The difference between this type of trading styles is that day traders look to close their trades within the trading day, right? Swing traders can hold trades for a long period of time, and it would be difficult for a day trader to adopt to swing trading styles, because I mean, if I'm, let's say for example, I'm already used to scalp strategies, um, it might be a bit difficult for me to adopt swing strategies um, as quickly as possible. So if you're a day trader, you can look to execute trades on 5 minutes, 15 minutes time frame. But you just should not neglect the higher time frames, because they give you the direction of the trend, right? So you should always pay attention to the higher time frames to understand the overall trend of the market. All right, guys, it's been an amazing Q&A session. Don't forget to use the link in the description to send in your questions. There's a link in the description that you can use to send